I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, the House of Mouse takes on Netflix. We talked to CEO Bob Iger about how Disney Plus will reshape the global streaming landscape. Plus, calls to break up big tech getting louder. But can Congress really force change on the biggest players like Google and Facebook? We'll hear from U.S. Senator Mark Warner. And Softbank announces a new $5 billion technology fund focused on Latin America. Hear more in our exclusive interview with Softbank Group COO Marcelo Claure. But first, to our top story. Disney is attempting to reshape the media landscape as the number of cord cutters grows. At its Investor Day, the entertainment giant shared new details on its highly anticipated streaming service. According to UBS, Disney Plus is expected to drive the fastest uptake of any direct-to-consumer platform to date. I caught up with Disney CEO Bob Iger in Los Angeles on Thursday.
What makes you think consumers are going to pay for this on top of everything else they're already paying for?
Disney, Pixar, Marvel, Star Wars, National Geographic. These are brands that are just beloved and that have a long history of serving the consumer for, many, many generations. And I think that, and are still popular and still relevant. And I think making them available on a new technology platform, that is simply more modern and I think growing in popularity at a price that makes sense with a user interface that's beautiful. I think that's why we feel confident that this is a product that people are going to sign up in droves to have.
Parents will be happy to know that some of the animated classics are coming out of the vault and onto Disney Plus. But in general, how will you decide what to put where and when between the theaters, between the channels, and between the streaming services?
Well, as it relates to films, movies that are made for the big screen, they will still be in what we'll call a traditional window. That window has served us extremely well. The studio has done over $7 billion in global box office twice, just making maybe about a dozen movies. And so we have no intention of using this platform to force movies onto the service from a timing perspective is any different than they would be available in the so-called pay window. And any movie that we make for the big screen will be on this service exclusively from here on out. And the same thing in terms of television. We're still going to make television shows for the traditional channels because they're still of great value to us, but we'll also make original programming for the new service that will only be available on the service.
Now, you said you will likely bundle Disney Plus, ESPN Plus, and Hulu. When and what will drive that decision?
Well, I think you can figure that we will bundle ESPN Plus and Disney Plus fairly soon. I don't have an exact date. We're launching Disney Plus in November. Hulu, we still have minority partners, and everything that we do with Hulu has to be done, with them in mind. So bundling, would be something that we might take to the Hulu management and the board, but it would require the approval. But we think that there will be consumers that will want all three, and eventually we want to make it possible for a consumer to buy all three. Will
you be attempting to buy all of Hulu?
We'll see. We've been in conversations with both partners about that possibility, but it's still a little early to speculate.
Now, you did give up some partnerships with Netflix as a result of, pursuing the streaming service. You mentioned some of your distribution deals. You talked about Roku. You talked about Sony. You didn't mention Apple. You didn't mention Amazon. Why not?
Well, the app will, in all likelihood, be available through traditional app distributors, Apple being one of them. So I'm fairly certain that if people want to buy the app, or subscribe to the app, maybe the better way to put it, that they'll be able to do so through Apple and the iTunes Store and other platforms. It could be the traditional cable distributors who also sell apps or sell subscription apps will do that as well. But we didn't have any announcements because we haven't made deals with all of them yet.
Now, you're on the Apple board. Now that Apple does have a direct competitor to this service, will you stay on the Apple board? Does that make sense?
Well, obviously, I'm mindful of my fiduciary responsibility to Apple shareholders as a member of the board. And when the subject is discussed at Apple board meetings, I am careful to recuse myself, and I'm in constant dialogue about making sure that I'm not doing anything that in any way would essentially cause me to be, not in keeping. It wouldn't be in keeping with what an Apple board member would do. But it's that business is still nascent to Apple and still relatively small, and so it's not really discussed all that much. And so far, it's been okay, and I'm in constant discussion about it.
All right. So you noted a lot of losses. You said Disney Plus and Hulu won't break even until 2024. Should we assume then that you'll be flat to down for the next few years? Or will you make that up somewhere else?
Well, don't forget, we're still growing the company, and there are other businesses, fortunately. Our theme park business has delivered great growth over the last number of years. We didn't give guidance on those businesses, and our media networks have been very healthy, and of course the studio has delivered great growth. We're also absorbing 21st Century Fox and its businesses, and that will start factoring into our numbers going forward. So we're not giving projections about the whole company, but we're obviously confident that we'll continue to deliver value to shareholders, both in the near term and long term.
What do the announcements today mean for Disney content overseas, specifically in China, in the broader Asia market, where we've got a lot of people watching right now?
Well, I think you can figure that all the content that we make for the service will be available internationally in different forms. In some markets, we'll launch the service as a subscription model. That won't be the case right away, and it won't ultimately be the case in all markets. There are laws in China that still govern over-the-top services, direct-to-consumer services, that we obviously have to comply with. So we're not certain exactly how the overall Disney Plus service will enter the Chinese market, but I think ultimately the product that is being made for it, if the Disney Plus service doesn't end up there, will be available to consumers in another form.
Now, you're working on 3 new TV shows for the Disney Plus service related to Star Wars. You've got a movie coming out in December. Are you at all concerned about Star Wars fatigue?
No, not at all. First of all, the movie that's coming out, in December, the 9th movie, it doesn't have a name yet, soon, we think is going to be great. And we have not announced any specific plans for movies thereafter. There are movies in development, but we've not announced them. But I think that we're going to hit pause and take some time and reset, because the Skywalker saga comes to an end with this 9th movie. There will be other Star Wars movies, but again, I think we're going to end up in a period where there'll be a bit of a hiatus. And that's what's great about what the Lucasfilm people are doing for this service, is we're going to fill that time with some Star Wars live-action series, which have never really been done before, and at a quality level of the movies. So, no, I'm not concerned at all.
You've completed the acquisition of the Fox assets. There have been some layoffs, but it hasn't been as dramatic as some thought it might be. Will there be more?
Well, look, we still have a lot of integration to go, and I think people know that. And with the integration will come consolidation. We've already said that. We've been transparent about that. We haven't talked about specific numbers, and we haven't talked about timing, but there will definitely be more consolidation going forward. We've really just started.
Now, you are making a huge transition here with these developments. Where do you see Disney in 5 to 10 years? I mean, do you see Disney as more of a technology company?
Well, technology, we've always seen Disney as a technology company. Actually, going all the way back to Walt's day, technology was incredibly important, really to do 2 things. One, to use it to make our product better, his multiplane camera and what it did to backgrounds in 2D animated films, for instance, but also to improve the experience of the consumer. I think in 5 years, you'll see Disney is basically at its core being a content company, a storytelling company that is using technology more and more to do all of the above. Make the product better, make the experience better for consumers, make it more accessible on more relevant, more modern platforms. In other words, distribute it in more modern ways.
That was Bob Iger, CEO of Disney. Coming up, it is one of the biggest tech IPOs in years. We'll bring you new details on Uber's plans to go public and if it will usher in a wave of massive listings. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. the biggest IPO this year, Uber has officially filed for its initial public offering, offering up new details on the company's operations and finances in this paperwork. We got some early reaction soon after the filing. Take a listen.
It's because it's sold off businesses in Southeast Asia that it's able to account this profit when really it lost, this $3 billion in operating losses. And if you add it up, I think it was $4 billion last year and $3 billion. It's been $10 billion in operating losses accrued over the last 3 years. So this is a massively money-losing company.
Which we're not surprised about. And Olivia, you watched Lyft significantly, another loss-making company that has been hammered basically in anticipation of these numbers coming out. How much do you think investor base is worried about loss-making companies right now when it comes to these new unicorns?
Well, it seems they're not worried at first. I mean, Lyft came out right at its price of $72. It went up, and then it saw a drop several days later. Of course, it went down 1% just today when Uber's filing came out.
Let's get the investor take here, because Mitchell, I'm fascinated by really the fact that these companies can grow so big on such vast quantities of private capital and then be able to come to the public market with such furor. Was there anything in the numbers in the filing that gave you pause for thought here?
So I haven't. So first, we are investors in the company, so that I wanted to make sure we disclose that. I have not gone through it in detail. Obviously, we are existing investors in the business, so we know it. We know it well. They did break out Uber Eats, which is a very good thing, which is growing crazy fast. The core business is still growing 40% plus a year. Here's the reality: public market investors, and we do public market investing as well, are crazed for growth. Like they just are dying to have companies that are growing really fast and that they can invest into. I mean, look today at this software company, PagerDuty, that just went public. It trades at 23 times revenues and grows revenues 46% a year. This company on the road, Zoom Communications, is one of the hottest software IPOs in probably the last decade, and is an enormous company that will trade at probably an extremely rich valuation. But investors are just dying for growth. And I think 3 months ago, if we had all sat here and said Lyft was going to be a $21 billion company, a couple weeks after the IPO, I think all of us would consider that a wild success. So. I
want to dig in what you mentioned there, Mitchell, because you talked about Uber Eats growing crazy fast. I'm surprised at how tiny Uber Eats still is. It's like 165 million of revenue. The bulk of the $2.5 billion that was made in the last quarter was sheerly ride-hailing business. Is that not a shock? Is that not a surprise?
So I haven't gone through all the numbers in detail. I literally, it was filed an hour ago. But I know in Q4 of 18, Uber Eats from a GMV perspective or a volume perspective was 2.6 billion of GMV. And I only know that because I knew that from a while back, and I know it was disclosed in the S1, but I haven't looked at the net revenue numbers yet.
Let's turn our attention to a man who has. Eric, you have delved into it, and I was kind of surprised by just how much of a dominant force ride-hailing is for Uber when it has got so many other parts of the business that it's growing.
Right, because Uber wants to sell this platform vision. Its user number has platform in the name. The focus is the suite of services. But then if you dig into Uber Eats, like you're saying, it's very small relative to the ride-sharing business. And I think that's going to be a question. It's growing on a gross bookings basis, but then if you dig into the net revenue, it almost looks like it reverses because of the subsidies around growing that business. If you're Grubhub right now, you've sort of got to have a little laugh, at least for the time being, because Uber's able to operate their food delivery business sort of unsustainably while trying to grow market share, but it just looks small relative to the ride-sharing business overall.
But this is a company, of course, as you were just saying, Mitchell, that is focused on growth and growth potential. And what is it? It's also spending significant amount, about $1 billion, on driverless cars. Can you paint the picture for us of the future of driverless and how important autonomous is to Uber's overall profitability? Because at the moment in the S1, they're saying, look, they might never be profitable.
Every company that's unprofitable always says that they're not going to be profitable. Let's remember that. I think autonomous is much further away than people think. That's just my own personal opinion. Some people think autonomous is 2 years away. I have a hard time believing that I'm going to get in a Uber or a Lyft up in downtown San Francisco and it's going to drop me off in Palo Alto with nobody in the car in 2 or 3 years. Like I'll take that bet with anybody. I think it's a lot longer away than people think.
Okay, interesting.
And I think there's a really other important thing though, in terms of the ability to make money. Uber is one of these companies. Lyft would be one, Amazon would be one, and Alibaba would be one, where customers that have what we call upward sloping cohort curves, where customers spend more and more money over time on the product. So if you think about it really quick, think about like everybody who joined the Uber or Alibaba or Amazon in like January of 2015. Over time, those people spend a lot more money over time. And why that's so important is that they don't have to reacquire you as a consumer. And so every time the four of us get into an Uber or a Lyft, my guess is they're quite profitable because you and I are not, they're not having to reacquire us. Another really interesting, I think one of the most interesting stats in the S1 actually, somebody had just texted it to me right before I got on, was that over 50%, or around 50% of people who use Uber Eats, it's actually their first time being on the Uber platform. So I think the ride-sharing business has a huge runway, still to go, given that 50% of people who use Uber Eats, are new to, they've never used in the ride-sharing.
Wow. So able to just grow off of that user base and continually. I'm going to get your perspective now, Olivia, on, we were hearing from Mitchell about what this says about Zoom and the other companies that are coming forwards that are in some, I think Zoom even perhaps makes a small profit to a certain extent. But what are we expecting in terms of so-called herd of unicorns, and how much oxygen is going to be sucked up by what Uber is about to bring to the table?
I mean, herd isn't even the right word. It's a stampede right now of unicorns crossing over to the public markets. And I think that the appetite is insatiable for them. I mean, we're about to see Zoom, as you mentioned, go. Pinterest is next week. Then we're going to see Slack. Postmates is supposed to go soon if they don't end up selling. And it just seems that people can't get enough.
I want to ask you, Eric, briefly, and then get Mitchell's opinion on international growth. Because did any of the numbers surprise you in terms of, yes, US, Canada dominant? I was surprised by how big Latin America is vis-a-vis, say, the likes of Europe.
I mean, I think one sort of amusing thing in the prospectus is this contrast Uber draws between sort of market share and category position. You know, its market share, it says, is very small because it sees a huge amount of growth opportunity for ride sharing in its position. But category position, so relative to competitors, it says, oh, in a lot of regions we have over 65%, whether that's the United States and Canada, Latin America, Europe. So Uber's both saying, listen, we have a dominant position all over the world in these regions we operate. And yet, we think we represent a small share of what's possible. And that's certainly the messaging coming out of Uber. And I think being able to confidently say that they either have a strong position in the countries that they operate in, or they own a stake in sort of major players in those regions, is a compelling international position.
Mitchell, briefly on international growth.
I think international is very strong. I'll draw a couple. One, I think Dara is a master chess player. He understands it from Expedia. He exhibited at Expedia. Expedia had done some interesting international stuff. So they obviously have big investments at Uber in Southeast Asia and Russia and China, all really exciting businesses. Latin America, the deal that they did in Careem will give them a near monopoly in the Middle East.
Yeah.
Australia is a very profitable region for them. It's interesting. If you think about Lyft, just back of the envelope, Lyft's worth $21 billion. That means Uber's business in the U.S. Implies that Uber's ride sharing is worth $40 billion.
Coming up, Slack is seeing rising investor demand ahead of its direct listing on the private market. Shares of the workplace software maker are going for as much as double their valuation last year. And later, he is one of the most critical voices in Washington on the topic of big tech. We're going to hear from Senator Mark Warner about his new push to protect personal data. This is Bloomberg. This week, Bloomberg reported Slack's valuation has risen to $16 billion in pre-listing deals. Ahead of the company's trading debut, some investors are buying stock for more than double the price of Slack's last funding round, which valued the company at $7.1 billion. Shareholders have sold the stock in the last few months as prices as high as $25 or $26 a share. This as the company plans to directly list its shares on the New York Stock Exchange in June or July. Bloomberg's Ellen Hewitt joined us with more details.
Slack is preparing to go public, as we said, via direct listing rather than a traditional IPO.
Like Spotify.
Just like Spotify did last year. And in preparation for doing so, there's a thing that Spotify did that Slack, it seems, based on our reporting, is doing as well, which is starting to release some of its stock on the secondary market, starting to allow some sales to go through with the idea of sort of two goals. First, doing price discovery around what range they might want to price their shares when they go public. And then also maybe trying to manage some volatility ahead of the listing. This is based on reporting that we've done with people familiar with these types of sales. The company isn't commenting, but it does seem like demand is really high. So the last time Slack raised money, that was in August, the shares were almost $12 a piece, and the valuation was around $7 billion, like you said. And now, based on some of these sales that we've seen go through, which granted, it could be small one-off type stuff, but it does seem to indicate an interest in Slack stock at least double the price that the last funding round suggested.
Well, and it's sort of the opposite of what we're seeing with Pinterest, which is now in the middle of a roadshow aiming to raise money at $3 billion less than its last private funding valuation. So why is there so much enthusiasm about Slack in particular?
I think investors just see opportunity for a lot of growth. They've always had strong performance, a lot of people paying for the service. They have a free version, but most people pay to access Slack. They've had strong growth. I think people just see it as kind of a strong software bet. And I think there are also questions that remain, especially given Lyft's stock price performance in the last week.
Absolutely. So talk to us about the roadmap for Slack from here and how that'll be different from a company that's going the traditional IPO route. Like what happens over the next few weeks and months?
Right, so as we reported earlier, it seems like Slack is preparing to list on the New York Stock Exchange, probably June or July, although as these things go, we never really know how it's going to happen until it does. But unlike with a traditional IPO, the direct listing means there's no lockup period for employees, and there's no additional stock that is sort of released into the market. It's just current shareholders then have the ability to sell.
So current shareholders and employees can sell right away?
Yes, right away. And so that's very different for a lot of employees who are waiting for the IPO moment to sort of realize some of the value that they've made in their equity.
What's the motivation for that?
So it's different with every company. So direct listings, just like with Spotify, work really well for companies that have a few things going for them. One, if they have a lot of cash already on hand, which Slack does, and I think Spotify did as well. Two, if they don't need to do a lot of publicity around the IPO, and rather if they're kind of a household name, Spotify definitely did, broad-ranging consumer service. Slack, a little bit, more business-focused, but generally something that I think many people have exposure to. They know it, they like it, the product's really well made, and so then they don't need to raise additional capital, and they don't need to do the marketing associated with an IPO. Then they can actually do this direct listing instead, which tends to be favorable if you meet those qualifications, right? And so everyone has said Slack is in a really strong position to do this. Some of the other companies that have been floated as potential direct listings, if this type of listing becomes more popular, is, for example, Airbnb. Similarly, really strong performing company with a lot of consumer awareness. Just really well known.
Bloomberg's Ellen Hewitt there. Coming up, lawmakers calling to break up big tech. What does it really mean for the biggest players like Google and Facebook? We will hear from Senator Mark Warner next. And Bloomberg Tech live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Welcome back to the Best of Bloomberg Technology. I'm Emily Chang. Well, a new bill was presented to U.S. Congress this week that takes aim at tech, with proposals to ban deceptive features on Facebook as well as other big sites. And there's been a rising tide in Washington to increase oversight of tech, from a comprehensive privacy bill to the Federal Trade Commission probe of Facebook's data sharing practices. Bloomberg's Caroline Hyde spoke to one of tech's most critical voices, Senator Mark Warner, on Thursday.
This is the first of a series of bills that I'll be introducing to try to put some ground rules around social media. This bill is focused on something that for many users may just appear to be a nuisance or annoyance, whereby you have agreements that you can't really understand, where you may have flashing arrows trying to urge you to always agree, where you can never find the unsubscribe component on a particular site. But what experts have shown is there is actually a great deal of manipulative behavior, both to adults, and our bill also focuses on children. We think this is a good starting point. What we've decided to do is try to take a bit of a light touch and set up, in a sense, an industry-driven standard-setting body that would be quick enough and nimble enough to move, as you mentioned, towards the larger users, 100 million individual users a month as a break line. And then we'd have the FTC as the fallback regulator if that industry-driven standard, which, you know, from a financial standpoint is a little bit like a FINRA, would be the securities. This industry standard groups would be towards these dark patterns. And I think it's a good place to start. I've got a series of other ideas around privacy, identity, content, and around transparency, and there'll be more legislation coming in each of those areas.
Okay, we want to dig into those in a moment, but first on this particular bill, it's bipartisan in nature. Do you think it'll get the sort of committees behind it that are needed to pass such a bill? Because at the moment, it doesn't seem to have that backing.
Well, this is an area that I think many of my colleagues, my background was in the technology field, so I hope I bring a little bit of knowledge to the floor. I actually believe all of the approaches that I'm going to take are bipartisan. I think they're less about liberal conservative and more about future past. And I think there is a growing recognition that kind of the wild, wild west days of the social media platform companies is coming to an end. And I actually think where a lot of the Commerce Committee, where this will be referred, and Deb Fisher, my partner on this, is a member of that committee, there is already work going on around the privacy domain, following some of the European models. So what my hope is, as I add these other pillars, that they may be ultimately wrapped into a larger piece of legislation.
So let's talk about the privacy nature there, because that seems to be where more consensus is building. Would it be based upon, do you think, something like the general data protection rules, the GDPR rules that were brought into force in Europe?
I think there are members in both parties, again, working bipartisan on looking at GDPR. I think there are certain areas GDPR got right. There are certain areas that are a little bit clunky. But privacy alone is not going to, I think, address the issues we need to. I think there are issues around, for example, rights we ought to have, knowing when we're being contacted by a human being versus a bot, for example. Being able to put up a geolocator. If somebody says they're posting from New York, but they're posting from Moscow, at least having some indication that may not be a true post in terms of where it originates. I think we ought to have a debate about identity validation. I worry, particularly as we think about how we grapple with hate speech. One way to look at this, and it would be have serious ramifications, would be having some level of identity validation. Estonia already does that as a price of entry onto their internet. There's a series of other ideas that we've got as well around transparency. I mean, one of the things we need to make sure, I think, for users to realize that these platforms are not free. If we knew how much data these companies were collecting about us and we knew that value of that data, I think there might be the ability for, frankly, new operators to come into the market, as long as we also allow data portability.
Does it frustrate you how limited the US has been in terms of getting any sort of legislation through? I'm looking at the EU having just made Facebook once again be more transparent about its terms and conditions to ensure that people do know that their data is being used. I think the UK, in amidst Brexit turmoil, has managed to push through some issues about hate speech. When do you think the US will be able to play catch up? Will it be able to? Should it?
Caroline, I think that is a very good point. Most of the technology innovation and kind of rules of the road over the last 50 years have been set generally by the Americans. And I think we're defaulting that leadership, and not only to the Europeans on GDPR, or to a much more bifurcated approach where California has taken some of the European models and trying to do that at the state level. I think, America acting is frankly in the best interest of some of these tech companies as well, or they'll end up with a hodgepodge of rules and regulations all over. Just recently, Australia put in place extraordinarily challenging rules and regulations around content. So these are all issues that are going to be touched, and if our government can actually step up to the task, and I do think the good news is most of these issues do not fall on a partisan basis. So I think as long as we can get focused, there are a number of members that candidly don't understand fully how a lot of these platforms work. So there's been a bit of an education process as well going along.
That was Senator Mark Warner with our own Caroline Hyde. Meantime, not content to sit around and wait for social media companies to regulate themselves, the UK is proposing its own new laws. If companies like Facebook, Google, and Twitter fail to prevent the live streaming of a shooting or other violent acts, they could face fines and bans. That could even include imposing penalties on individual company managers. Monday, we talked about this proposal with Bloomberg Tech's global executive editor, Tom Giles, and RBC Capital analyst, Mark Mahaney.
They may just have a technical challenge which no company can overcome. Same thing with YouTube and the questionable quality of content you've seen on that site.
Is it a technical challenge or a values challenge?
Well, it could be both. At least there's a technical element to it. There may be a values challenge to it. The fact that the CEO, the founder of Facebook, is asking for regulation may be a sign of maturity. Look, there are three major risks for these large platforms: Facebook, Google, and throw in Amazon too. It's competition, maturity, and regulation. And regulation has risen dramatically over the last 2 years. And in terms of the stocks, it probably puts a little bit of a cap on the multiple that they can sustain. There are going to be extra costs, and I think that's already in Facebook's numbers. That's what caused the company to materially lower its guidance about 3 quarters ago now. So this is going to be ongoing risk. I don't think it's existential, and I don't think some of the most extreme things we've seen about having them divest WhatsApp or having them divest Instagram, I think that's highly unlikely to happen. And there's possibly an advantage here that you're removing wild card regulatory risk by bringing in mainstream regulation.
But there's this new law that was very quickly passed in Australia in the aftermath of the Christchurch shooting, which would require these companies to pay up to 10% of their revenue if they violated the law. I mean, they're violating this law almost every day. I mean, there's hateful content up there all the time. Couldn't that be material to their business?
I guess it could be. I'd be surprised to see that actually implemented, but maybe it will be in one country. It's the risk. It's a global media platform. We've never seen anything of this size. One area of regulation we haven't talked about is just given the size of the company. Like Facebook accounts for about 90% of social media usage worldwide, ex-China, maybe 95% since they own Instagram, and so yeah, it's going to be an issue. And they should be regulated. Whether that should be in a way that undermines the profitability of the business, that's the open question. Tom,
you've been walking through the potential new laws. It's a little dense, but tell us what exactly these different countries are looking at here.
Yeah, it depends from country to country, right? Overall in Europe, you already have GDPR, right? So that subjects these companies to a potential 4% of overall revenue fine. You have the UK considering something extra that goes beyond that would punish these guys for failing to curb the kinds of content that we saw in the aftermath of the New Zealand shooting. You have France, just a digital tax. And so there's a lot of questions around exactly what that would look like. Would that be a percentage would that be taken away from the corporate tax they already have to pay in that country or in that region? Those things remain to be seen. But I think what's interesting here is, Mark Zuckerberg needs to be careful what he asks for. He talks about saying, hey, we're willing, we're ready, we need the regulation, we welcome it, we invite it. But what kind does that look like? I don't think what he and Sheryl Sandberg and Jack Dorsey are talking about is fine us, take our revenue, please. I think what they're asking for is help us come up with guidelines, help us come up with definitions that are going to help us navigate and set a standard for what's acceptable and what the repercussions should be when we fall short of that. I don't think they were talking about 4% and plus of our revenue intake.
Bloomberg Tech's Tom Giles and RBC's Mark Mahaney. Coming up, Softbank is hiring a trio of industry veterans to oversee a new $5 billion tech fund headed by COO Marcelo Claure. Our exclusive interview with Claure next. And no longer just something to be imagined in a galaxy far, far away, we will tell you just how scientists captured the first image of a black hole. This is Bloomberg. A major move for Softbank. The Japanese conglomerate has tapped industry veterans from Dunlop's Third Point and JP Morgan to help oversee a $5 billion technology fund focused on Latin America. I spoke with SoftBank Group COO and Sprint Executive Chair Marcelo Claure about this new fund and about the opportunities in the region. Take a listen.
When you look at the size of the market, the Latin American market is twice the size of India, and it's half the amount of China. So it's in the right place, has the right population, has the right technology adoption. So we're looking at tech companies that are growing, that are leveraging data, leveraging artificial intelligence to disrupt traditional business models. And I can tell you that in the first 3 weeks, we're already looking at 140 companies. So this is way above our expectations in the amount of potential investments that we plan to launch in the Latin American region.
Wow, 140 companies in just a few weeks. So the Vision Fund is raising record amounts of capital at a time when dry powder is already at record highs. How does SoftBank stay disciplined and put so much capital to work at the same time?
I think we've been quite disciplined in terms of we had a very clear investment thesis and investment mandate, and we are looking for that company, that number one company, that entrepreneur that has the ability to leverage artificial intelligence, leverage data to disrupt traditional business model to enhance people's lives. Now that's broad in terms of that we believe that because of artificial intelligence, the level of disruption that we're going to live in the next few years is significant, and therefore pretty much every industry is in the midst of disruption. So we choose that winning company that we can put our capital, we can put our growth strategy, we can bring them into our ecosystem and basically help them grow. And I say so far we could not be pleased. And the Vision Fund level, we have over 70 companies that we have invested. They're doing great, and we're applying the exact same logic, the exact same discipline to do the same in Latin America. The Vision Fund traditionally has focused on India, on China, on the US, and now we decided to put some focus into Latin America because of the size of the market and because the same technology trends apply to that region of the world.
So tell us about your day-to-day. How much time will you spend on this Latin American part of your job and your duties as COO of SoftBank Group?
Yeah, so we're pretty well organized within the SoftBank ecosystem. We have a CEO of the Vision Fund, Rajiv, who is in charge of managing the Vision Fund. I run what is called SoftBank Group International, and that is I run most of the operating companies in the group. Those are companies that we have a majority ownership, such as Sprint or ARM or Boston Dynamics or Energy Group. So I run that, and also now I'm launching this new technology fund. So I'll be spending some time in Latin America, but the core of my business is basically running most of the operating companies in the group, as well as being the CEO of the entire group. So we work in a partnership between Masa, Rajiv, Marcelo, and Sago. We are the four leaders in the company, and we basically are able to accommodate our responsibilities accordingly. And we have an amazing group of people throughout the world, of great investors that basically supplement us. So we're busy. There's a lot of activity. There's a lot of deals, but at the same time, we're applying the same rigor and discipline to the level of investments that we do.
Now, you've got a big IPO potentially coming up. SoftBank, a huge investor in Uber. What are your expectations for Uber's IPO?
Well, we try not to comment in our companies, in potential, in companies that we have invested in their IPOs. But what we do is, we have a lot of potential IPOs coming in the future due to the fact that we have invested in a lot of tech companies that are growing at an amazing rate. So we're hoping that the investments that we made are going to be translated into great returns for the current investors in our funds and great returns for the new shareholders of those IPOs. I think Uber is a fantastic company. I think Travis did an incredible job in basically disrupting transportation, and I think Dara has done a great job in terms of taking the company to another level. So whenever Uber decides to do an IPO, we're sure that it's going to be a great IPO because it is a great company.
Now, you were reported to be getting one of SoftBank's 2 Uber board seats. What's happening with that?
I mean, it's complicated due to the fact that we invest in so many different companies, and the fact that we're a foreign direct investor. All that is in process through CFIUS and the different government agencies. But to be quite fair, we believe that in many cases, because we're investors in so many different areas, and that's why we've traditionally put other people on board. So there's no hurry for us to join the board. Company is doing great, and management is doing great. So, and they already have quite a sizable board.
That was our exclusive interview with Softbank Group COO Marcelo Claure. Still ahead, ride-sharing, getting off the ground. Literally, how startups like Jet Suite X are changing the way we fly. This is Bloomberg. It's being called a breakthrough for humanity and something that pushes the boundary of science. I'm talking about the first ever glimpse of a black hole in space. You are looking at a black hole at the center of Messier 87. That is a massive galaxy in the nearby Virgo galaxy cluster, some 55 million light years away from us here on Earth. Up until this point, a black hole was something we only saw in simulations or Christopher Nolan's sci-fi movies. It took 8 telescopes scattered around the world from Hawaii to Antarctica and beyond to make this possible. To tell us about this exciting new frontier, we spoke with Caltech professor and experimental physicist Ranha Adhikari and asked what questions a 6-year-old might ask a scientist.
I think children have the best questions. So the reason that they're excited is the same reason I'm excited. They look at it, and it's just a thing that you would never see on Earth. And the kind of laws of physics that are going on and making that kind of image are the kinds that you only hear about in Harry Potter novels or comic books.
So here are some questions then from my 6-year-old son. The first was, where did it come from? Where do black holes come from?
Yeah, see, this is what I'm saying. These are the best questions. This is exactly what we talk about at an astronomy conference. Where do black holes come from? And everyone has their own opinions. And this is one of the observations that we think will help us figure this out. But the only way to get a big black hole is to put together a bunch of little things. And this thing is billions of times heavier than the Earth, or billions of times heavier than the Sun, which is thousands of times heavier than the Earth. So it's a lot of things that have smashed together. And one of the things we really don't know is, do black holes make galaxies, or do galaxies make black holes? Because they all seem to go together. So what are the
opinions?
For the heaviest ones, one of the opinions is that when these things are flying around in the center of the galaxy, it's really crowded, and their gravitational pull drags on each other and eventually slows things down, and they all fall down and land on the black hole. And part of the reason you see all this glowing orange material around the picture of the supermassive black hole is it's the friction of these gases rubbing together as they fly at the speed of light, and just rubbing together, just like rubbing your hands makes them hot. If you rub a bunch of gas together at the speed of light, it generates X-rays and gamma rays and all kinds of bright radiation. And that's why we can see it from so far.
So here's another question from my son. He said, why was it so hard to take a picture? Why can't they just send a drone in there?
Yeah, we will send a drone in there someday, I hope. This is a picture taken using radio waves, which is really unusual, and it's not something normally we're used to, but it's something like when you see in the movies people use sonar or radar to figure out what's going on in the ocean or on the ground. So it's a different kind of radiation from light, but it's just as good. And in this case, we use this, or the people who observed it use this because they're able to put radio telescopes on different sides of the Earth. So it's a little bit like how something would look like if your eyeball was the size of the Earth. And why is it so hard? A black hole is about as small of a thing as you can make, as far as we know from Einsteinian physics. So if you took 5 billion suns and smashed them together until they completely collapsed, this is about the smallest thing you could make from that much mass. And it's so far away. It's millions and millions of light years away. So, you know, we think it's something small, like when you see an airplane in the sky, that's small, or when you see the moon, that's small. But this thing is millions and millions of times further away than the moon, or billions of times further away than the moon. And the moon that we look at, it's something like a half a degree across in terms of angle, but it's hundreds of times farther away from the Earth than it takes to get from LA to New York. If you did that trip 100 times, that's about how far away the moon is. But you'd have to do that trip hundreds of billions of times to get as far away as this black hole is.
Caltech's Rana Adhikari there. Finally, back there on Earth, you can now take to the skies in a brand new way. Private flights were once reserved only for the rich and famous, but now all you need is a smartphone to hitch a ride with one of these aviation startups.
Imagine you want to take a quick flight for business. Instead of shuffling through long security lines and navigating huge terminals to board a crowded commercial airline, you can instead opt for the private flight experience, all with a touch of an app. Blackbird and Jet Suite X are two startups in a flock of companies pushing the private flight industry forward.
We think of ourselves kind of in the same vein as the on-demand transportation companies like Bird, like Uber, like Lyft. We just are the journey that's a little bit further.
Blackbird offers flights in small aircrafts, and the company is focused on the 50 to 500-mile journey. It recently announced a $10 million funding round backed by New Enterprise Associates.
Aircraft today are really only utilized roughly 1% to 2%. It's a highly underutilized asset, and it's an expensive asset. So when you can actually start to amortize that cost basis over a lot of rides and also enable a lot of pilots who want to fly a tremendous amount more, you really create a flywheel of increasing adoption.
Jet Suite X, a Silicon Valley unicorn valued at $1.5 billion, advertises semi-private flying with not-so-private fares. The company utilizes larger jets and pairs passengers together, offering flights between short-range destinations. Other private aviation companies, such as Jetly, offer the private flight experience by putting passengers on empty legs of private jets.
What I see from the space is a lot of technology-minded people who think that with the right algorithm, you can make money from the inefficiencies in private aviation. You've got big players in the industry. For all intents and purposes, they are operating airlines, whether they're scheduled or charter.
Like established commercial airliner Delta, offering full-priced private flights as well as discounted empty leg flights.
On the other side of it, you've got the technology component of the non-aviation crowd. And that's not to say that this is not a business that can grow by leaps and bounds and there's not huge opportunities. It's just that I think to date we have not seen the regulatory regime keep up with a lot of the tech innovation.
FAA guidance forbids private pilots from profiting from flight sharing and even shut down the flight sharing services Airpooler and Flight Now in 2014. But Blackbird's pilots are commercially certified and own their own planes, keeping the startup's cost low while meeting FAA regulation. The charter flight industry in the U.S. has grown by 2.6% in the last 5 years to reach revenue of $25 billion, and tech startups want a slice of that market.
And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And we're live streaming on Twitter. Check us out at Technology. And be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.